Hello and welcome to this edition of Closing Trades. We're coming to you live from the ET Now Motilal Oswal studios. An excruciating pain in the markets. And I mean, to be fair, today it seems like it's more global triggered. Not to say that our markets weren't looking and all battered and bruised, but the weak handover from US markets, I mean, the fact that you had a Nasdaq fall of over 500 points, the Dow knocked off about 200, and similar was the case with the S&P 500 index. Asia lapped it up. I mean, on closing, Japan has fallen 1,100 points. Even Hong Kong, one of the best performing indexes of late, that also fell about almost 800 points. And Shanghai as well took a good 2% knock. That said, our market started off gap down, and then from there, it's only managed to grind lower and lower. Right now, as we speak, we're staring at an over 400-point fall on the Nifty. 22,250 is where we're currently at for the futures, and we even reached the 22,000 mark for the Nifty spot. And I can't really pinpoint any much of green because all sectors are bleeding right now, be it technology, telecom, oil and gas, automobiles, banks. Pick up any sector and that's giving you a negative return today. IndusInd Bank has sunk about almost 6.25%. You've got TechM, you've got M&M, Wipro, Infosys, the entire technology pack. TCS is down a good 4% right now. Bharti is down 4.25%. Maruti is down. Bajaj Auto is weak. L&T is lower. ICICI Bank, a lot less pain there, but 1% lower there as well. Flattish for Reliance, flat for Axis Bank, HDFC Bank up in the green. So is Coal India after a couple of brokerage upgrades which kicked in later last night. Having said that, the only one pocket which continues to hold out and see some amount of follow through from yesterday, perhaps, and that's the entire MFI segment. So look at a Shriram Finance, for instance, that's holding up. Bandhan Bank is in the green, and AUSFB as well is still holding up 1% as we speak right now. But I can't begin talking how bad the market breath is today. Within the F&O universe itself, you've got a count of 208 standing to the declines, with just 8 names standing to the advances, namely the ones that I just read out. But look at the knock on a BSE, that's down almost 11% right now. MCX is down 8%, Granules down 7.6%. Jubilant Foodworks now staring at almost a 7% fall. And then you've got an Oil India as well, which is down a good 6.5% as we speak. Good time as any then to bring on board our experts and find out how much more pain before we see any sort of stability kick in. Nishchal, hi, afternoon. Your thoughts? I mean, one thought that, if the US markets were to fall, maybe we're going to fall a little less. We've already fallen so much. Clearly doesn't seem to be the case.
Hi, afternoon. Thanks for having me. I think we are very close to the bottom, or that's what my thought remains to be. Basically, I'm becoming constructive on the market now. So you see, basically, there are 2 or 3 things which I would want to highlight. One is obviously beginning January, we have seen the government is becoming very constructive on the economic front. So whether it was the tax rate cuts, whether it was the interest rate cuts, or recently, basically the spending which we saw in December and January, the figures have just come out from the government side. So I think all these three things basically are positive for the economy. On the other hand, basically market has corrected almost around 10-12%, and the stocks are down 25-30% from the top. So I'm saying this is a very good time, basically, where it is looking like basically that this is a constructive time. You should go out and start looking out for the stocks, basically, which you have always wanted to buy, and maybe start adding to your portfolio.
Nishal, that's the question that everybody is been asking about, that where's the bottom? Good to know that you are now becoming constructive, but help us understand that which are the sectors that you are eyeing at this point in time, because if you can talk stocks, the best. If not, at least pinpoint the sectors that are looking good to you right now.
So I think after a long time, I think banking has started looking interesting. It has underperformed for the last 4 or 5 years. But if we really look at it, even in this whole fall, I think Nifty has not gone, Nifty Bank is not down or hit a new low. It's holding on its own. But I think what's really happened is basically that the government has become constructive on the banking side. So interest rate cut first, then almost $1 billion or $1.5 billion worth of liquidity getting injected. And on top of it, now they have cut the risk weightages. So I'm saying it's very, very clear that the government has realized that for 5 years they wanted to control the liquidity. They have done that. And now it's a time basically to let go so that the economy once again starts doing well. So I think this is a very, very constructive phase. So I think banking is one sector basically one should look at. Consumer is another one. Basically, we have started seeing some first signs of recovery on the rural side when we speak to a lot of companies. Rural seems to be now reviving with the government's intervention and good monsoon. So I think consumption looks good. And there are certain other sectors basically which have not done really well over a period of time. I think chemical seems to be one of them, basically where I would go out and start looking for. So I think these are 3 or 4 sectors basically which I would start looking constructively on.
All right, but Nishal, when you talk about consumption, if you can pinpoint any of the themes that is looking attractive to you, because when I see some of these jewelry stocks, they are not holding up. Some of these auto counters, they are definitely in the reverse gear, at least for today and for quite some time now, when stocks like Tata Motors are getting hammered. And other than that, help us understand that where are you finding opportunities?
So I think one of the sectors basically which I would look out for is the FMCG, because I think rural is largely, once again, the first impact will start happening as far as rural is concerned on the FMCG side. Stocks have corrected, I think almost all of them. And once the recovery starts happening on the rural side, you will start seeing basically the consumption coming back onto the rural side. The discretionary consumption, basically, we have to see what is going to be the impact of this rate cut. I have started seeing basically that the rate cuts, sorry, beside the rate cut, the income tax cut, I think that is putting a lot of money into the hands of the middle class, the upper middle class and the middle class. And I think that should drive the discretionary purchases, but we are going to see it maybe a quarter later. But what we are seeing at the moment is the rural side, and that should be helping the FMCG company. So within the consumption basket, I would actually focus on FMCG at the moment.
Interesting. Nishal, hold on to that thought. Lots more to talk about with you. And we'll talk about where the valuations for these FMCG plays have actually settled in at, and perhaps get in some stock ideas too. But after this very short break.
Welcome back to Right Here on Closing Trades. What we see in the markets is a mild recovery coming in for Nifty Bank, at least from the day's lowest point, and stocks like Bandhan Bank, heavyweight HDFC Bank, as well as AU Small Finance Bank and Axis Bank that are seen to be taking the lead. But definitely the shade of red still continues, not just on Nifty Bank, while no substantial recovery what we are seeing for Nifty 50. But where are the markets headed? Let's try to find out that. And we are being joined by Jay Bala, Chief Market Technician at cashthechaos.com, as well as CA Rudramurthy is also with us on the show. A very good afternoon, gentlemen. And Jay, I first want to have your take on the markets, because nothing actually has been holding up in this sort of a market. Tell us, how are you seeing the markets? Because till now, we have been just talking about the broader end of the market drifting into that bear territory, while when it comes to Nifty 50, it's just 4% away to have that 20% correction. Do you believe it is too soon to call it a bottom?
Yeah, hi, good to be here. We don't speak that often, Srishti. And see, I interacted with Anisha sometime in September, October last year, and I mentioned that Nifty is set to correct to the June 4th low, the post-election drop of 21,280. And that's where the market is headed. Yeah, you're right. Never stand in front of a moving train. The momentum is looking quite strong to the downside. And although 22,100 is a important support, I think the market's most stronger support is probably coming at about 21,800 to 21,280. So it looks like the selling could be very close to being done, but we don't want to preempt the market. Let the market tell us that it's bottoming out in form of a reversal signature. Until that point, it's a little bit too early to call for a bottom.
Too early to call for a bottom. Rudra, what is your chart telling you right now? Are you feeling the same? And where is it that you actually see any sort of support come by?
See, in fact, a lot of jokes are moving in social media. The daily support is at 3:30 p.m. In fact, one way around, definitely markets are catching momentum on the downside now, and having broken 22,800 and also 22,400, and there is no oversold territory whatsoever, and markets are seeing daily sell-off. Also, advanced decline ratio is so bad, and we are seeing mid and small cap stocks just selling off. So for me, when it comes to index, Bank Nifty is definitely outperforming Nifty. And for me, Bank Nifty support now emerges closer to around 47,000, and Nifty should be somewhere at around 21,800, where we might see some amount of respite. But however, mid and small caps, the selling should continue, and we should be very sector specific and stock specific in this market if you want to be on the long side. And even if you want to build a portfolio for a longer horizon, definitely these are great opportunities to buy, but still stay with mega large cap and large cap stocks. And especially when it comes to sectors, look at sectors like private bank, chemicals for that matter, metals. So there are a lot of good stocks available here for your long-term portfolio, but still focus on large cap than on mid and small cap. Nifty is headed towards 21,800 first, and Bank Nifty towards 47,000.
Interesting. Nishal, that's the thing, right? I mean, you were talking about safety in banks right now. That really seems like a consensus trade, but consensus doesn't really make you money. Given that a large part of the market is looking, pretty attractive right now, the valuations have come off quite a fair bit. Other than chemicals, where within mid and small caps do you find opportunity for a better, alpha generation in one's portfolio?
Is that question for me?
Yes, Nishal, for you.
So I think we should stick to the sectors which we are talking about, and basically where you find comfort as far as valuation is concerned. I think that's where you should be heading towards. So not necessarily you want to look at a mid or a small cap, but if that mid and small cap is corrected enough and you are feeling comfortable about the valuation, I think you can look at the mid and small caps also in those sectors. So as far as banking is concerned, I think across the sector seems to be very interesting. And from though I don't understand technicals, but from the technical side, basically they have not performed for the last 4 or 5 years. So I think they seem to be in a good position.
While we do note that you are refraining from just calling it a bottom and you don't want to time the markets right now, but at the same time you also believe that we could be near to those bottom levels. Help us understand what exactly in terms of the indicators will you be watching out for to actually call it a reversal, and also which sectors can actually participate at the first in this sort of a reversal you believe?
I think there are pockets which are actually even breaking out as when the markets are hitting fresh 52-week lows. If you look at something like an SRF, it hit a multi-year high. It's consolidated between 2021 and 2025 and reached fresh record highs and pulling back. That looks bullish. So as from a sector, I would think that SRF being in specialty chemicals, that might be a pocket you want to keep your eyes on. But it's the rest of the stocks within that space is not showing signs as SRF is doing. So that's an important space. And but there are more ominous signs that are coming for the market rather than positive signs. Because while HDFC Bank is counterbalancing the weakness in SBI's drop today, if we don't want to see HDFC Bank drop below 1620, if it were to drop below 1620, that will cause a bigger drop for the overall markets, because it is 30% of the banking sector, and the banking sector is 28 to 30% of the Nifty. So, and the Nifty IT sector, which was holding on until last several weeks, that's breaking down significantly. And the US techs also pointing to an important trend change. So there are more ominous signs there. So, this is how I'm looking at the market. The sign you asked for would be the markets to turn from a significant support. 21,800, just like Rudra pointed out, is also my important support. But 21,280 has been my focus since the 1st of October. And one of these two levels, if the markets were to reverse in a very strong fashion, then that will be an indication of a strong counter-trend bounce or a reversal. We need to look at the markets closer on an hourly to intra-hourly time frame and then come to a conclusion.
All right, but other than that, when you believe that the breadth of the market is not looking that great, Jay, also help us understand that which sectors are even now looking more vulnerable to some more correction.
Yeah, autos, banks, FMCG. You know, I put out a note in October that the FMCG sector has possibly clocked multi-year top. So you need to be very careful there. Avoid FMCG and treat them as just trading plays if you get opportunities. Autos being the market leader, the markets are not going to bottom unless the auto sector bottoms. So auto sector is looking quite vulnerable. Mahindra and Mahindra was the strongest within that space, but post the Tesla negotiations and probably because of that, the tariffs coming down for it, that is also starting to look weak. And without the auto sector turning around, I don't think there's a bull market in India. So watch the auto sector as a very important turnaround candidate, and that's still an avoid at the moment.
Okay, profound statements there. That's the word coming in right now from Jay Bala. But Nishal, would you want to, counter that? Do you think that this is a structural reversal, or do you think we've still got an intact bull market? And yes, it is a deep correction, which has been part of any historical bull market as well.
So frankly, I do not understand technical. So I'm not be able to say whether it was a bull market or a bear market. What I was just trying to say is that at these valuations, you are becoming more constructive in the market. And the major worry was basically on the valuation side. I think that has been a good correction. Government policies are supporting at the moment. Yes, we have an issue basically as far as the global economy is concerned, the tariffs and all. But I think that is now seemingly getting priced in pretty well. Now, will it go another 1,000-point lower or 500-point lower? I have no idea about that. But at these prices, would I be nibbling in the market? Definitely. And those are the sectors basically which I had said, which I believe basically fundamentally the support has started coming.
Shivangi, hi, afternoon. What's your market strategy right now? Still focused on selling, or do you think it's time to bottom fish now?
Good afternoon, Aisha, Shrishti, and everyone in the panel. Thank you for having me. So we've seen that market has been in pressure and continued selling pressure continues over here, even though there has been a minor pullback move, but then we'll have to see how sustainable it is because call writers are increasingly strengthening their positions at the higher zones. So rejection is there. So first on my radar is a sell call on emphasis. IT stocks have been, taking everything with a pinch of salt, and we've seen that the weakness has been persistent here from the last around about 5 months with a breakdown on the monthly basis now. So volumes and price is confirming that there is weakness which could persist here. On the daily basis also, we've seen that the key exponential moving averages have been broken with of course weakness in the entire space. We could see more weakness over here. So recommending a sell here with a target of 2150 levels and with a target of 2150 levels with a stop loss of 2290 zones. So second pick on my radar is Indigo, which is witnessing resilience and strength even despite the market weakness. And this sector has been one such which has been relatively stable as compared to the other packs. And Indigo specifically is forming a triangle formation on the monthly basis, a narrow range, which is it's getting ready, to come out of this range. And even on the weekly basis, we've seen that the hurdle zones have been surpassed, and stock is holding near its higher zones of the band, which is indicating that strength will continue here. So recommending a buy here. Now, the next targets that we're looking at is around about 4650 over here with a support of 4370 levels.
Are some of the stocks that you can look at this point in time, but with this Nishal, we'll let you go on that. Really appreciate you taking the time out and speaking with us, and also highlighting some of the stocks, some of the sectors rather, that you like at this point. But Jay, the other sector that I wanted to touch upon with you is the PSC index, because nobody is actually talking about it. Forget about the fundamentals. On the technical front, what I see is the 7th consecutive month of decline coming in, and it is actually heartening to note that in the first half of 2024, it was one of the darling sectors. In the second half, it was a brutal sell-off, and that still continues. But Jay, what are your thoughts on the same? Do you believe that there's more pain left?
It might be a short-term bottom that's due. I don't think it could be a long-term trend reversal. I'm looking at supports for the Nifty PSC index at about 7,800. There is momentum, positive divergence for the sector. So possibly we could see a reasonable bounce, say somewhere close to 8,800. But we need currently it's not showing signs of reversal, but there is a potential for it. But as I said earlier, it's likely to be a counter trend bounce rather than a trend reversal.
Jay, you're not looking at any buy indicators anywhere, right? Because going by your view, it seems like there's definitely more pain and pretty much across the board.
Yeah, barring specialty chemicals, I'm not looking at anything else. And even in specialty chemicals, SRF, I wanted it to drop a little bit lower for it to come to reasonable support. But that's particularly, somewhere around 2,500 change. So even there, that could be a 10 to 15% drop before it turns around. So most of the sectors are looking negative, even with this kind of beating down. Usually markets bottom with some kind of distress selling. Whether this is or not remains to be seen. The jury is still out. But there is still time for the markets to give us a buy signal. And bottoming is a process; it's not an event. Whereas the top, when the market forms a top, it's generally an event. So even if the market were to bottom, it gives you sufficient time as the process happens. So there will be a sufficient time. So it's better to be outside the market and thinking that it's better off rather than be in the market and wish I was outside the market.
Interesting. Okay, Jay, stay with us. I want to definitely talk to you about what you're seeing on the charts for the US equity markets. But let me quickly get in some closing ideas too. Rudra, what's on your list?
See, two sell calls. One is a sell on BHEL. It has broken crucial support, which was at around 185. So having broken decisively 185, stock is headed towards 165 zone. So one can sell in futures with a stop loss of 185 for a target of 165. And also for me, Crompton shows a very, very clear weakness. Open interest is getting added on the negative side with stock prices coming down. And again, it has broken crucial support at 330. So having broken 330 and staying below that, Crompton is again a sell available in futures. So take a sell call on Crompton for a target of 310 with a stop loss of 330. So sell on BHEL and Crompton.
BHEL and Crompton, clearly from our chartist, it's a sell bias today, no wonder then. We'll take a very quick break. By the way, Europe also has started off on a very weak note. Most of those markets too are bleeding as we speak right now. You've got about 0.5% to a flattish move coming in with a negative bias across the European markets too. We'll discuss what the charts for the global markets are reading, but that after this very quick break. Back with closing trades right here on ET Now, and rough as it can be, that's how the closing for the week is. And I think the only support, like Rudra was just mentioning, is going to be 330 when we're done for the week, because this is not a market that you want to, see any further, literally. This week alone, we've knocked off about almost 3% We even broke that 22,100 print. So yeah, it's looking bad out there, and there's no way of really sugarcoating what's happening. I mean, look at a Tech M that's down 6%, Wipro down 5.5%, M&M, one of the strongest stocks of this bull market, that's knocked down quite significantly from its 52-week peak. I don't know if we can bring up that chart alone or not, because today itself it's fallen about 5%. M&M is now at 25.86 right now. Shrishti, perhaps you would have a better handle on what the M&M 52-week peak was. There you go. It's still holding up 31%, but it's a drop nonetheless from that 52-week high. Bharti has fallen. That's down about almost 5%. Technology, of course, has been bleak. But even names like ICICI Bank, HDFC Bank, they too have skimmed off a little bit from the top, definitely. Let's also welcome on board Sudeep Bandyopadhyay then and find out what he's making of the market right now. Sudeep, hi, afternoon. A painful day, but at least today we can say and blame it on the globe because it was a bad handover from US equity markets. Asia as well leapt it up and seems like we're also sort of getting swept in that storm.
Absolutely right. I think the global market was weak, and I think that has continued and definitely influenced India. Of course, we have our own set of challenges, and FIIs have been relentlessly selling, and that selling, it's just not abating in any manner. Let's hope that the GDP data which comes definitely is better than what the market is expecting. I think that's one ray of hope which I'm holding on to. And if that does happen, I think there will be once again, probably a little bit of positive data point as far as India is concerned. Beyond that, I don't see any major data point. The tariff related all these announcements is creating havoc with investor sentiments and FII sentiments, and that is having significant impact on India.
Well, certainly all eyes on that. But amidst this, we also have a very interesting news flow coming in from Nitin Kamath as well. He's the founder of Zerodha. And what he's saying that the markets are finally correcting, and he has no idea that for how long this correction can persist. But he is definitely giving some sense that what's been happening in the broking industry, where the volumes as well as the number of trades are definitely shrinking. And there's been a sharp sell-off over there. It's been a 30% drop in the activity across brokers, and that is definitely weighing heavy on the broking industry. The other key concern he is highlighting is that the government will not make even 40,000 crores in terms of STT in FY 25 and 26. That was the target set, and that will be at least 50% below that 80,000 estimate is what he's highlighting. So definitely challenging times for the broking industry. But Sudeep, I wanted to have your take on this one, because a lot of these stocks are within the listed space we're having and seeing that traction. They have off late come off their highest point, of course. But do you believe it is time to yet again revisit some of those stocks in the portfolio, given the challenging time in the broking industry?
Definitely. I think, fundamentally financialization of savings is definitely happening in India. And that does give a long runway for all these companies. Yes, this temporary setback because the market correction has been sharp and brutal, and it has been continuing for the last 4-5 months. And probably it will continue for some more time. And of course, when this kind of correction happens, volume shrinks, and that's what pretty much is happening. But overall, financial market participants, financial market companies, and financial market infrastructure companies do look good from a long-term perspective. If I have to pick up some stocks in this space, taking the opportunity of this correction, probably I'll look at, KFintech and CAMS. I think they have a bit of a more resilience compared to the pure play broking companies. Their fees don't get directly so much impacted as a broking company's revenue gets impacted when volume shrinks and market starts correcting. Also, these companies have opened up the Southeast Asian market where the rates are much better, and long-term looks definitely very good. I won't mind looking at some of the exchange companies also, particularly MCX. I think BSE is good, but the valuation still is full. So MCX can be definitely looked at current levels.
Look at exchanges right now than looking at brokers. That's where the safe haven perhaps could be. While BSE, of course, is cracking really hard today, but MCX is what Sudeep believes is going to be a good buy. But Shimangi, I want to come to you with two stocks. Bharti as well as M&M. M&M, of course, has seen about an 18% fall, I think, from its 52-week highs, that of 3270 thereabouts. But Bharti, given the correction in Bharti, I think has just about started.
Absolutely. There has been, resilient stocks which have been witnessing, weakness, and this is, quite bruised as of now because Bharti Airtel in its space used to be one of the strongest counter, and M&M also used to hold that flag. But of course, we've seen that weakness has, come into these stocks as well. Now, talking about Bharti, it's clearly an accident today. We've seen that more than almost 5% of all today. This stock has broken its crucial support zones as well. So even though it is still holding on to the lower band on the weekly basis, but I believe this this level is all set to be broken with the amount of selling pressure that have been intensified today. So overall weakness could continue here till round about 1500 levels with a resistance at 1600 zones.
That's the take coming in on M&M as well as Bharti Airtel. Let's watch out for those. But moving on, and Adani Green Energy has achieved a remarkable milestone, surpassing 12,000 megawatts of operational capacity, a first in India's renewable energy sector. This accomplishment underscores the company's commitment to delivering 50,000 megawatts of sustainable energy by 2030. The company's operational portfolio now stands at over 12,000 megawatts with a mix of solar, wind and wind-solar hybrid capacities, and this capacity can power approximately 6.2 million homes and prevent the emission of 22.64 million tons of CO2 annually. Adani Green Energy is also developing the world's largest renewable energy plant in Kavra, Gujarat, which will have a capacity of 30,000 megawatts. So that's the take we are getting and the latest updates from Adani Green Energy. But other than that, today all eyes will be on the auto stocks as well, and coming Monday as well, because February auto sales data will be through, and just ahead of that, we are seeing the weakness trickling in on the auto counters along with the markets. Why so? Because you should not have much expectations from the Feb sales. It's expected to be a bit of a mixed bag, but it's just be a minor jump what we are expecting for the passenger vehicle as well as the tractor segment. When it comes to the passenger vehicle segment, M&M of course is expected to do well given the kind of strong order book and the pending order book rather what the company has. So on that counter we are expecting a 13% jump, but apart from that it could just be a single digit growth for rest of the players. Within the commercial vehicle segment, let's watch out for Eicher Motors VECV. A 13% uptick is what we are expecting, but other than that some of these other counters, Ashok Leyland as well as Tata Motors VECV, can see some of a decline on a yearly number. Within the two-wheeler pack, let's watch out for Eicher Motors Royal Enfield, because January month was quite strong for the company. This time though we are expecting a bit of a moderation, but 85,000 units is what we are expecting. From TVS, Hero MotoCorp, Bajaj Auto, don't expect much of a fireworks there. But lastly, from the tractor division, what the internals are highlighting is that the farmer sentiment is really strong on ground and the tractor sales can actually do very well. Escorts, we are expecting a 4% jump, while for M&M tractors a 12% uptick is what we are factoring in. But Rudra, I specifically wanted to have your take on Escorts, because given the fact the commentary regarding the farm sentiment as well as the agri sales panning out, that has been really strong, but the stocks definitely not participating. But Escorts at close to 2,800 levels, how do you see this counter?
Definitely making a lower top and lower bottom formation, and if you see on the chart the trend is clearly on the downside. So for me, Escort, at least it has to make a move above 3,000 so that let it get some amount of momentum and then you can buy, or else on the lower side if you want to pick the bottom, next support emerges closer to around 2,500 zone. So at current price I will definitely avoid, wait for lower levels to buy. or if you want to pick on the momentum, at least let it cross 3000. So at this range of 2500 to 3000, I will give a pass to Escort and wait for these levels to come.
GDP numbers this evening also perhaps may act as a trigger, and we've got the growth in Q3 FY25, which is expected to show an upward bias. It is likely to be in the range of about 6.3, driven by increased government spending and revival in rural consumption as well. Let me take it across to Gaurav from our research desk and help understand what the ET Now poll is penciling in for the GDP data.
India's GDP growth numbers will come out very soon, and when we look at estimates, now Street is expecting around 6.3% growth for third quarter of FY25 for India, and the reason being that there are two reasons specifically: rise in government spending, and second is that when we look at consumption specifically in the rural area, there has been an uptick there, and that is the reason why Street is expecting this growth to remain somewhere in the range of 6.3%. Now let's not forget that this will be lower if we compare on a year-on-year basis, because in the last quarter, last year same quarter, we saw a growth of around 8.6%, but there are some global uncertainties which are happening. But on the other hand, if we compare it on a quarter-on-quarter basis, last quarter we saw India's growth was at around 5.4%, which was slowest in the last 7 quarters. So it is definitely expected to be higher than what we have seen in the last quarter. Other than that, when we look at GVA, which is gross value added, there also we are expecting to see the number somewhere in the range of 6.2 to 6.3%. And what it will do is that it will actually eradicate the gap that we have seen in GVA and GDP growth for first half of FY25. There are certain sectors why investors and analysts believe that GDP growth could be around 6.3%. And first is that agri segment. Now there we may see growth in the somewhere in the range of 4.8% versus what it was at 3.5%. On the other hand, industry is also likely to perform well. It is expected to grow somewhere in the range of 5.7%, and this will be driven by corporate performance and at the same time some kind of private sector increase in the GVA segment. Lastly, when we look at services segment, now in this segment we may see a little bit of slowdown on a sequential basis. It is expected to grow somewhere in the range of 7%. The growth that we have seen last quarter was at 7.1%. When we look at some of the GDP estimates, let's also not forget that National Service Statistics Office will also come out with their second advanced GDP estimates for full year, and any kind of downward revision in the previous numbers can actually possess upward risk for GDP estimates. Let's also not forget that RBI has also revised the GDP growth numbers downward for FY25 to around 6.4%, and amidst the global uncertainty that we are seeing and increase in USD INR interest rate and the swap rate, definitely it will be worth watching out for is how India's GDP number come out and how the outlook remains for Q4 FY25.
All right, thank you so much, Gaurav, for getting us all those details. So definitely we'll watch out for that data. Let's see whether or not we get a number above that 6% mark is what the street is working with. But other than that, back to the markets, what we see in terms of the index, so the Nifty energy is another sector which has actually declined for the 5th consecutive month and is now seen to be hitting a 14th month low for itself. But within the energy and especially the power basket, Sudeep, what we are getting to hear from the reports and the ground reports suggesting that the demand on ground is seen to be once again inching up. Help us understand your take on the energy and the power basket.
Positive on the entire power segment for quite some time, and we maintain our positive bias. I think there has been a structural change. The demand is very, very strong, and this demand is going to persist in the long term. Every nook and corner of India has been electrified. The electrical gadgets usage is increasing. In every sphere of our life, the demand for electricity is increasing. So obviously, the demand for electric supply is huge. So the entire ecosystem, whether it's generating companies, distribution companies, finance companies, ancillaries, all of them are getting orders and opportunities of performing and outperforming. If I have to pick stocks, considering all the corrections which have happened, I will probably still go back to the industry leader in the generation, which is NTPC. I think it does look good, considering the strong demand, excellent backward forward linkages, and execution capabilities, and the way they have kind of presented themselves. The correction is an opportunity for long-term portfolio building. Other than that, one can look at the power financials as well, because the demand for the setting up new power plants and catering to this demand cannot be met by banks. it has to be the specialized finance companies, which is the PFCs and RECs and IREDAs of the world. I think all three have a great opportunity. Taking the opportunity of this correction, which is very sharp and brutal, let's say in case of IREDA, I think it's a good stock to buy for long term.
Given that IREDA is also going to be added in the FNO series now, it was a non-FNO stock, remember. But good chatting with you, Sudeep. Thanks for your time as always. Let's see, in fact, what IREDA is up to, because it started off gap down. Maybe because of the market fall, it would have still continued to reel under pressure, even though it's perked up a little bit from the session lows, still down about almost 5.5%. But yeah, we've slipped below that 22,000 mark and 22,200, I beg your pardon. And it's really an 8-month low that we've knocked for ourselves in this week alone. But let's see what the March series has in store for us. But Shivangi, Rudra, both of you, thank you so much as always for your time. I'm going to hand it over to Snehi then to wind up how the day as well as the week was.
Well, absolutely. It's not looking good either for the day or the week, but let's take a look at how today's trading session has panned out on the markets. It's an almost 2% intraday cut coming in for the Nifty 50, a 400-point cut coming in just in today's trading session alone. In fact, we have been struggling to hold above that 22,100 mark all day, and that's the level that we seem to be closing near. Let's take a look at what Sensex has done in tandem with the Nifty, a 2% cut coming in on that front as well, and that's lower by almost 1,500 points in today's trading session, so not looking good at all for the Sensex as well. On the flip side, let's take a look at what the broader markets have done, because if you think this is where the carnage ends, the broader markets have taken it deeper on the chin today, a 2.5% cut coming in on the mid-cap index, and what's done even worse is Nifty small cap. That's a 3% intraday cut coming in for the Nifty small cap index alone. Let's take a look at the advanced decline ratio. That's deeply in the favor of the declines, because while you have close to 400 stocks in the advances, 2,300 stocks are declining in today's trading session. On the back of that, the India Wix has spiked up 5 to 6% in today's trade, cooled off slightly to be around that 4% uptick, 4.6% rather, so that 5% uptick continues to be there on the India Wix today. Let's talk about some gainers and losers. Very few gainers on the Nifty 50 side. Shriram Finance, HDFC Bank, Coal India, as well as Trent and Hindalco were some of the winners today. Coal India, of course, on the back of that price hike taken by one of its units on the coal that it's been selling, a 300 rupee per ton price hike. On the flip side, what did not do well at all today was IndusInd Bank, Tech Mahindra, Wipro, M&M, Bharti Airtel, Tata Motors, all trading with cuts of anywhere between 4.5% and 6.5%. Let's talk about sectoral moves. Then Nifty IT, biggest loser in today's trade, a 4% cut coming in just today. Nifty Auto, Media, PSU Banks, FMCG, Energy, Pharma, Realty, Metals and Bank. That's the pecking order of your most to least losers in today's trading session. The likes of Tech Mahindra down by 6%, Wipro, Emphasis, LTI, Mindtree, Infosys, TCS, all of them trading with cuts. That's how today's market session has wrapped up. If you take a look at what the benchmarks have done, what the sectors have done, on the back of brokerages, Coal India upbeat notes coming in. Investec has upgraded ICICI Prudential Life to a buy from a hold, so the entire insurance sector was in space. UBS and OMCs continues to maintain a buy on HPCL, IOCL and BPCL, so those stocks were in focus today on the back of this note as well. Although no matter how positive these notes were, the stocks have all given into the market pressure today. Jefferies on real estate, they prefer DLF, Godrej Properties and Lodha. Also on the back of Godrej Properties, you had an IFL management meet also happening, but nonetheless that stock was also lackluster in today's trading session, closing rather flat. But that's how we've wrapped up today's trading session. It's looking very somber for the markets. This is how we finally end February, and aren't you glad we've come to an end to February, because the markets have tanked, and how in the month that has gone by. We can only hope for the March series to be better for the streets.
If you like this video, then like, share and subscribe to ET Now.